Moss Adams is pleased to present another in our ongoing series of continuing professional education webcasts. Our presentation will start in a few moments. Before we begin, here are a few things to keep in mind. You can customize both how you view our presentation and how you interact with the presenter. For better viewing, close all other applications and turn up your speaker volume. You can also adjust window size and placement. At the bottom of your screen, you'll see a series of icons, each relating to a different aspect of our session. For example, you can click the file folder icon to download the group attendance sheet and a PDF copy of today's slides. You can ask our presenter questions during the webcast by clicking Q&A in the bottom left-hand portion of the icon bar and typing in your question. We'll do our best to answer all questions during the presentation or follow up via email. If you experience technical difficulty during today's presentation, refresh your browser by hitting the F5 key. We'll ask polling questions throughout today's presentation. Per the National Association of State Boards of Accountancy Webcast CPE standards, CPE credit will be awarded based on your participation in these polls. To respond to a poll, click the button next to your answer. If you're attending this webcast in a group, in order to receive CPE credit, you must complete our attendance sheet, available in the file folder icon at the bottom of your screen. Please have all group members sign the sheet, and please remit only one sheet per group. Also note, today's session will offer you 1 CPE credit. To receive credit, you must meet the requirements as specified by the National Association of State Boards of Accountancy. CPE credit can be awarded only to participants registered as themselves and is not available to participants who view the on-demand version. We'll track your progress and alert you when you've earned CPE credit. You can then click the certificate icon to open a PDF file you can save to your computer. We'll email a copy of your PDF certificate in 2 weeks if you can't download it today. As a reminder, the presentation you're about to see is not legal, investment, or accounting advice. We encourage you to seek the counsel of a professional service provider to apply this content to your specific circumstances.
Good morning, and welcome to today's webcast, Navigating the Uniform Guidance for Federal Awards. I'm happy to introduce today's speakers, Erica Forhan and Ashley Osten. Erica, I will turn the line over to you to get us started.
Thanks, Emily, and welcome to the webcast. Ashley and I are very happy to be here with you today to talk about the uniform guidance for federal awards. It's certainly a hot topic for everyone in this profession dealing with administering federal awards and auditing federal awards. And today we're really just going to highlight a few things that we wanted to bring your attention to. In the time we have together, just an hour, it will have to necessarily be at a high level. But if you're in charge of administering federal awards and complying with the requirements or establishing internal control over compliance or overseeing an audit, providing audit support, you're going to want to dive deeper into some of these subjects, but hopefully today you'll get a feel for which areas you want to hone in on a little bit more. And I know that in our audience we primarily have recipients of grant funds, a few auditors as well, so we'll try to speak to everyone's interests today. But again, we know that you're going to have to do further educating of yourself, and you probably already have done quite a bit because the uniform guidance has been with us for a bit now. And in our slides, we've also included some references to the uniform guidance so you know where to go to get a little bit more information. And so these slides should be a good takeaway for you to go back and learn more. We want to just start with an overview quickly of kind of the history of the uniform guidance. Back in 2013, it was first published by the Office of Management and Budget, or OMB. And that was sort of laying out the uniform guidance rules from the OMB federal perspective. And then in 2014, December of 2014, there was a joint interim final rule published. And what that was implementing guidance. That's when the federal agencies adopted the uniform guidance and put it into play for their particular programs. What we discovered, however, is that uniform guidance turns out not so uniform after all. Although the effort was to make all the agencies get on the same page and apply this guidance consistently to their program, we're finding that some agencies did adopt it with some changes and some differences for their agency programs. And some make a ton of sense. Well, I'll say every one of them makes a lot of sense to that particular federal agency. A lot of it had to do with complying with existing regulations. HHS is one agency that has a lot of their independent regulations that they needed to make the uniform guidance work with. So there's quite a few agency exceptions with HHS, but other agencies have them as well. So when you're auditing multiple different kinds of programs, you're going to want to pay attention to what those differences are. That December 2014 guidance also had some important technical corrections in it in implementing that final uniform guidance. And then after that, there have been a series of frequently asked questions that have been issued by the COFAR. The COFAR is the Council on Financial Assistance Reform, and it's composed of the OMB controller and senior policy officials from 9 other federal agencies, the agencies that tend to give the most federal dollars out. And it's a very highly recommended resource for you to make sure you're on top of what I call aftermarket adjustments to the uniform guidance. These are clarifying questions, and sometimes they do give a lot more insight into some of the uniform guidance rules. One key resource I wanted to point you to is ECFR. It's a website that has the Code of Federal Regulations that's updated pretty much every day. That is what I have found to be the best, easiest place to find the uniform guidance as well as agency implementation. I want to give you a visual of what that looks like on your screen here. This is just the first page, top of the page, but you'll see in here, if you type in just ECFR into your browser, you'll probably get to this page. And there's a link then to what you do is you type in or choose from the drop-down list Title II, and you get to this page. You'll see in here parts 200 to 299. That is the government-wide uniform guidance. Below that, then, are the federal agency implementing regulations. So each agency has a section there, and that's where you would find some of those agency differences that I was talking about. But I would recommend you go here instead of trying to go back to what was issued through Federal Register notices. With that, we have our first polling question. I want to get an idea of your level of preparedness related to the uniform guidance. So you have 4 choices here, kind of spanning the spectrum. Please make a choice, and we'll see where we are as a group. I think it might be interesting for those of you who are watching this webcast with several people from your organization. It might be interesting for you to compare answers to see if each individual feels like you're at a different point in the understanding or the preparation for implementation of the uniform guidance. We'll just give you a few seconds here to answer, and I think if you're an auditor, you probably want to pick NA, or you can pick your favorite client and answer for them what your assessment of their preparedness is. All right, let's see how we have answered this poll here. Okay, it looks like we've got the majority of people have updated many of their policies, but you have more to do to consider significant changes. That's actually great to hear, that you've certainly started, but you're aware things are changing and there's more to do. There's certainly going to be more to do because this is a complex set of rules, and how it actually plays out in practice is going to be interesting. There's some unanswered questions. And then some of you are just starting your journey towards being aware of the requirements. I think, some people do have time, especially if you don't have a lot of awards. It's not always that, it doesn't always have to be that complicated to implement this, but some larger organizations or some with multiple awards, it's going to be quite the effort, so it's good to know that you're getting started. So the uniform guidance does combine and streamline guidance from 8 previously existing circulars, and they're listed here. And so this is the combination of audit principles that were in A133, the cost principles for each type of organization. There were different cost principles for higher ed and not-for-profits and state and local government. And then also the administrative requirements. They're all lumped into one now. What is not included are the cost principles for hospitals. Those are still in their previously existing form. And what this brings to mind to me is that for those of you who are award recipients, you might have policies or procedures or manuals or even forms, templates that you use in monitoring and administering your federal awards that refer to the old cost principles or old administrative requirements. You might want to be thinking about adjusting those and updating those as you transition into awards being covered by the uniform guidance to get to the right source documents for awards that are now covered under the uniform guidance. A couple of important dates to go over. Hopefully you've got these nailed, but we have seen some confusion about that. There's kind of two paths of dates to pay attention to. One is the effective date of the uniform guidance as it pertains to individual federal awards. So awards that are received on or after December 26, 2014 are subject to the new rules under the uniform guidance. So that's new awards and any incremental funding made on or after December 26, 14. Now that's a different timeline than when the audit requirements come into play. The audit requirements have to do with an entity's fiscal year. So for the fiscal periods beginning on or after December 26, 2014, the uniform guidance audit rules apply. So that's, you're going to do your audit in accordance with the uniform guidance for fiscal periods beginning on or after December 26, 14. So what that means is there's a period of time where you might have awards that you've received that are subject to the new rules under, like cost principles under uniform guidance, but they are still being audited under A133. So June 30, 15, year end, for example, would have been audited under A133, but some of those awards would have been subject to the uniform guidance. So I have a visual here that might help a little bit. And again, this might be a good takeaway for you to pick your fiscal year and decide where you are. So here we have this bright red line of December 26, 2014, when the uniform guidance takes effect. And above, you'll see the awards that are affecting, or I'm sorry, the cost principles that affect the awards. You could have awards spanning this entire period that were under the old cost principles because they were granted prior to December 26, 2014. At the same time, you can have awards that are operating under the new uniform guidance cost principles. And then below this chart, we have the audit requirements. So again, there's kind of a hard division between what periods are audited under OMB Circular A133 and what periods are audited under the uniform guidance. So here's a picture of the different subparts of the uniform guidance, and there's one that we're not going to talk about at all today. That's subpart C. That has to do with the federal agencies and their responsibilities. So I don't think we have federal agencies, or that's not our target audience for today's webcast. So we're not going to talk about that, but wanted to give you an idea of sort of where you can navigate through the uniform guidance to find the topics that you're interested in. Ashley is going to spend some time on subparts D and E, the administrative requirements and cost principles. And then at the end of the webcast, I'm going to come back and talk about subpart F, which are the audit requirements. And that is a bit of a misnomer because there's actually auditee requirements in subpart F that we'll talk about. And then there's 11 appendices that are included too, and these include things like the data collection form and the OMB compliance supplement. A couple of key changes in terms of definitions to highlight for you. The uniform guidance was very prescriptive of its use of the terms should and must. And these terms are differently defined than the auditing standards. For any auditors on the phone, you want to be aware that these terms are different than generally accepted auditing standards. But a must in the uniform guidance means it's absolutely required. It's a required action or procedure or a characteristic that has to be in place, and so on. It's an absolute, it's required. A should, however, is a best practice or a recommended approach. You don't even need to justify if you did not follow that best practice or approach. It's just an idea of how one might accomplish the end requirement. Another change is subrecipients versus contractor The rules did not change, but we wanted to draw your attention to the fact that the terminology of contractor is new. It replaces the term vendor, but no changes in that. I think Ashley will touch on that a little bit later too, but whenever you're talking about vendors in the past, that terminology should be updated to contractor. And then one more area to highlight for you up front is personally identifiable information and protected personally identifiable information. This is important to know because, first of all, the Uniform Guidance has its own definition of these terms. It was not previously defined in other federal agency guidelines, so all the agencies have come together and decided what is personally identifiable information and protected PII. It's important to know what this is because as an auditee or as an auditor, you have to certify at the end of the audit in the data collection form that the reporting package does not include any protected PII. Or if it does, that you're authorizing the Federal Audit Clearinghouse to go ahead and publish your report. Remember, these reports are being publicly available now. The entire reporting package will be publicly available on the Federal Audit Clearing website. And so you want to make sure there is no protected PII in your reports at all. And certainly you're going to need to sign that certification, so you want to be keeping an eye on that. And the difference between these are defined, so you can get more information when you read the Uniform Guidance itself. But personally identifiable information are things like first and last name, address, work phone number, email address, those sorts of things that are publicly available anyway. But when you add on the protected term, protected PII, are those sorts of things that are publicly available, like a first and last name, combined with other types of information like social security number, credit card number, mother's maiden name, educational transcripts, and that sort of thing. Then it becomes protected PII. You want to keep that out of your single audit reports, reporting packages, financial statements, corrective action plans, all that stuff. Keep that clean. And then one last thing, program income. It now has a definition. So any of you who do have program income, you want to make sure you know what you have that falls into that definition so that you can treat it appropriately and make sure you're complying. So with that, I'm going to hand it over to Ashley to talk about some aspects of the Uniform Cost Principles and Administrative Requirements.
Thank you, Erica. Over the course of the next few slides, I'm really just going to highlight the more significant changes within the cost principles and administrative requirements. So we'll start with the key areas of focus. We're going to go over internal control, procurement, subrecipient monitoring, and allowable costs. These are the more significant areas where we've seen significant changes as a result of the Uniform Guidance. So first, the key changes in internal controls. So internal controls was mentioned more than 75 times in the Uniform Guidance, so it's definitely a focus area. Ultimately, recipients were always required to have internal controls, but an organization is really now explicitly required by the Uniform Guidance to establish and maintain effective internal control. With this explicit requirement in mind, it's important to really revisit your organization's internal control documentation as it relates to federal awards. Many organizations have good general controls, such as payroll, procurement controls, but may be lacking when it comes to the compliance requirements. So there's no expectation or requirement that the non-federal entity document or even evaluate internal controls prescriptively in accordance with COSA or the Green Book, even though they were cited in the Uniform Guidance. The COFAR FAQs clarified the usage of these references as a best practice only. It's up to the organization to really exercise judgment in determining the most appropriate and cost-effective internal control in a given environment or circumstance. There are also written procedures required in various areas now, which I'll highlight one on the next slide, related to conflict of interest policies, but those are included in the Uniform Guidance if you'd like to reference those. So as Erica mentioned, there are various changes, far too many to highlight all of them, but we've included a few areas to consider here along with the related reference. as Erica mentioned, it's a good takeaway for you after the end of this presentation. So in terms of conflict of interest policies, the Federal Awarding Agency now has to establish a conflict of interest policy for federal awards. The non-federal entity has to disclose in writing any potential conflict of interest to the Federal Awarding Agency or pass-through entity. In terms of the identification of federal awards, an organization now must identify in its accounts all federal awards received and expended within each non-federal entity's financial management system. This should include things like the CFDA title and number, the federal award ID number and year, the name of the federal agency, and the name of the pass-through entity. In terms of allowable costs, we'll go over allowable costs in more detail later on in this presentation, but the general criteria for determining whether a cost is allowable hasn't really changed. It still has to be necessary and reasonable for the performance of the award. But it also has to conform to any limitations or exclusions in the principles, so be aware of the uniform guidance and regulation changes here as you update your internal controls. Continuing on from the last slide, like I mentioned, there are pretty big changes in several of the areas which we're going to highlight again later on in this presentation. When it comes to procurement, the recipient really needs to understand the rules that impact your organization. The guidance is really aimed at reducing fraud, waste, and abuse, which has led to quite a bit of tightening in this area. If you're a pass-through entity, you need to ensure your controls match the compliance requirements. So the controls really need to be thoughtfully considered to ensure your controls are up to speed with the new guidance. And then in looking at subrecipient monitoring, the pass-through entity now must do a risk assessment up front of the subrecipient, so that actually requires internal controls. So an organization should potentially set up new internal controls up front that weren't in existence previously. So just some best practices as we wrap up this section on internal controls. This is really your organization's opportunity to revisit internal controls, update your policies and procedures, not just focusing on general controls, but also on controls over compliance requirements. The changes from the uniform guidance should be reflected in your internal controls, and you should really share these changes in internal control with your auditors, because they are curious about how you're changing your controls, and that will help them make the audit go smoother. So now we'll move on to procurement. So procurement rules have really changed as a result of the uniform guidance. Your mileage may vary in terms of how much they have changed for your organization. For example, there may not be much change at all for states and local governments, as the uniform guidance now follows the same rules as the previous OMB Circular A102, but it's important to be aware of the key changes and how they will impact your organization. As a result of the uniform guidance, there are now specific contract requirements, so you should review and verify contracts are in compliance, and full and open competition is also now required. The most important point on this slide is that the grace period has been extended. So in the latest round of COFAR FAQs, the effective date was revised from 1 year to 2 years. So if your year end is June 30, for example, you are not required to comply until July 1st of 2017 or fiscal year 2018. So while this may seem like a lot of runway to implement the new changes, this grace period was really provided for because the procurement standards are actually pretty difficult to implement, and there's a lot of changes there. So this is what we call the Procurement Cloth, and it goes through all of the various methods of procurement within the uniform guidance, and I'll outline all 5 of them here today. So micro purchases, these are purchases where the aggregate dollar amount does not exceed $3,500. This was recently updated from $3,000. So when it's practical, your organization should really distribute those micro purchases amongst qualified suppliers on an equitable basis. It doesn't require any competitive quotes, and management determines that the price is reasonable. So for small purchases, this includes purchases up to $150,000 or the simplified acquisition threshold. Informal purchasing procedures are acceptable, but price or rate quotes must be obtained from an adequate number of sources. For sealed bids, this is also used for purchases over $150,000, and under this purchase method, formal solicitation is required, and the fixed price is awarded to the person that conformed to all material terms and is lowest in price. This method is the most common procurement method for construction contracts, for example. For competitive proposals, this is used also for purchases over the $150,000, and this procurement method requires formal solicitation and is really used when that sealed bid method isn't appropriate. The contract should be awarded to the responsible firm whose proposal is most advantageous to the organization, with price being one of the various factors that you consider. For non-competitive proposals, this is also known as sole source procurement. This may be appropriate only when specific criteria are met, such as when the item is available only from one source, when a public emergency does not allow for the time to get a competitive proposal, or after a number of attempts at a competitive proposal process, the process is inadequate. So with that, I think we'll do our first polling question here related to this section. And that's just saying, under the Procurement Cloth, micro purchases are purchases where the aggregate dollar amount does not exceed what dollar amount? And we have 4 options here. And just as a reminder, in order to get CPE credit, you have to answer 3 of the 4 questions that we have in our presentation. So just be sure to click one and click submit. Give it a few seconds here. All right. So the majority of you are right. It is $3,500. It was recently updated from the $3,000, as I previously mentioned, and that $150,000 is really that simplified acquisition method, which is used for small purchases, sealed bids, and competitive proposals. So just wrapping up this procurement section, some best practices. The uniform guidance now requires a high level of formal documentation to meet the procurement standards, beginning with really required organizational policies and procedures through individual contract award and oversight activities. So your organization should consider reviewing policies, procedures, internal controls, and making sure your staff are up to speed, especially on that procurement cloth, to make sure that they know what the guidance is requiring. So now we're going to go through subrecipient monitoring. As Erica mentioned, the terms have changed, but the criteria to determine whether an entity is a subrecipient or a contractor is basically unchanged. A pass-through entity really should make a case-by-case determination whether each agreement it makes casts the party receiving the funds in the role of a subrecipient or a contractor. And you should really keep in mind that the substance of the relationship is more important than the form of the agreement. One of the other key changes in the uniform guidance includes required risk assessments of subrecipients now. The pass-through entity must have appropriate internal control that supports the achievement of subrecipient monitoring. So there's some formality that's been issued as a result of the uniform guidance to the risk assessment and monitoring phase that is now required. So this slide I won't go into a ton of detail, but it's really just outlining the subrecipient versus contractor terms, and it should be a good resource to you to help in the determination between those two, subrecipient versus the contractor. So please feel free to reference this slide after our presentation as you're making that determination in your organization. So a few other key changes related to subrecipient monitoring. I think it's important to remember that providing accurate award information to your subrecipients on a timely basis is important. You know, if you're providing money through to subrecipients, you need to ensure that every subaward is clearly identified as a subaward. It includes the required information at the time of the subaward. And if any of these data elements change, then you should include those changes in subsequent subaward modifications. If you are a subrecipient on this call and your pass-through entity has not given you clear information on your awards, then you should really reach out and contact your pass-through entity to obtain this information. Other key changes require the pass-through entity to honor the subrecipient's federally negotiated indirect cost rate. And the pass-through entity should complete all closeout actions for federal awards no later than 1 year after receipt and acceptance of all final reports. And this wasn't specifically stated in the old principles, so this is a new requirement. Some additional key changes related to monitoring. So subrecipient risk assessments are now required, as I mentioned. In order to really assess the risk of your subrecipient, an organization could consider previous experience as a federal awardee or a subawardee. How many subawards does your subrecipient receive? What are the results of their previous audits, their single audits or their independent audits? And then what does their financial systems and internal controls look like? Have there been any new personnel? Have there been substantial changes to their systems? Those things are the things that you should consider when you're assessing risk. If you as a pass-through entity determines the subrecipient has higher risk, then the pass-through entity should really consider imposing conditions based on risk or prior history of failure to comply on the subawardee. Monitoring is also required during the project period, and this would include a documented review of financial and program reports and a greater emphasis on just detecting and addressing deficiencies. So does your subrecipient have slow performance or no performance at all? Do they have financial management issues? Are they slow to spend or don't spend at all? Those things should be documented in your monitoring procedures. So using this information that you gather as a subrecipient, you could consider whether adjustment is necessary to your own records as a pass-through entity. Just a few more changes here. Depending upon the pass-through entity's assessment of risk posed by the subrecipient, you could consider monitoring tools, which are detailed on this slide, which I won't really go through in detail. The more significant point that I want to make here is that, changes in the audit threshold, as Erica will go through a little bit later, from $500,000 to $750,000, that may impact your subrecipient monitoring because this increase in threshold actually reduces the audit burden for approximately 5,000 non-federal agencies. So some of your subrecipients, if they receive small dollar amounts, may not actually get a single audit anymore, and so you should take that into account when evaluating the risk and monitoring that subrecipient. So now we'll go through just a few best practices as it relates to risk assessment. As I mentioned previously, risk assessments now should be done on an annual basis. That's required. These risk assessments should really focus on identifying and mitigating risk, and by considering the items on this slide, prior experience, results of previous audits, things of that nature. And the pass-through entity should also ensure appropriate documentation of this risk assessment that you included in the subrecipient file or something like that. So I think with that, we're going to go to our third polling question. And this just states, as a best practice, how often should your pass-through entities perform a risk assessment on their subrecipients? Should it be quarterly? Should it be annually, monthly, or pass-through entities do not need to perform a risk assessment on their sub? Give it a few more seconds here. All right. So the majority of you are right, and I had just highlighted that on the previous slide. The risk assessments are required on an annual basis from here on out. So just going over a few more best practices for monitoring. In order for the pass-through entity to effectively monitor, the pass-through entity should really ensure that activities necessary to monitor are really clearly identified and the responsible parties are involved, which should include the PI or the principal investigator. Should review debarment lists, and if you have everyone involved, then that will ensure that your monitoring is more consistent. Characteristics of effective monitoring include those items that are on this slide, data quality reviews, required progress reporting, things of that nature. Once the pass-through entity has completed its monitoring, the pass-through entity should really develop and implement an internal action plan to revise their policies and procedures, to enforce compliance with internal requirements. And then I think it's also important to consider whether you need to separate fiscal monitoring from programmatic monitoring, because the monitoring could be different based on fiscal or program reports. And then in terms of the follow-up procedures, the new guidance makes it pretty explicit that a pass-through entity must actively issue management decisions regarding audit findings, which are identified during this monitoring process that you're performing. And the sub actually must implement remediation plans as a result of this monitoring. Once a corrective action plan is put into place, the pass-through entity should review the corrective action plan and apply remedies accordingly. For example, if federal funds were used toward an unallowable activity, those funds should really be recovered or otherwise resolved. And then the corrective action plan might create a new pre-approval process for future expenditures. So that's just one example. Now we're going to go through allowable costs and a few key changes. Just as a reminder, we are certainly not discussing everything that changed. Just as we have iterated, we recommend that you go to the guidance as well to see all of the changes. But the good news here is that there were no changes in the overall definition. However, there are 21 items that now require prior written approval in accordance with the uniform guidance. This is just where you may seek to obtain approval in advance of incurring a special or unusual cost to avoid really it being disallowed or disputed based on unreasonableness. One of the more significant changes noted here is related to the inclusion of administrative and clerical staff salaries, and they have to be integral to the project, they have to be specifically identified, and they also can't be recovered as indirect costs. So that's an important change that I wanted to highlight here. In terms of direct and indirect costs and indirect cost rate, the uniform guidance now requires federal agencies to accept a non-federal entity's negotiated indirect cost rate, really with few exceptions. Non-federal entities that have not received a negotiated rate can actually charge a de minimis rate of 10%, and that can be used indefinitely. While we don't anticipate that this will impact many of our state and local governments, as they have traditionally had indirect cost rate plans, this may become more of an issue related to pass-through entities and pass-through funds, as we expect some not-for-profits and other organizations to really push to include some of those indirect rates as part of their budgets and grant plans. So for those non-federal entities that already have a federally negotiated indirect cost rate, you can actually apply for a one-time extension of this rate for a period of up to 4 years. And if the extension is granted, then the non-federal entity has to reapply at the end of the extension period. And this is now required that pass-through entities provide this indirect cost rate information to subrecipients. So now I'm going to talk about specific costs, compensation, personal services. So when it comes to that, there have been significant changes to a more principles-based rather than a rules-based focus. Previously, everyone defaulted to the way they do time and effort reporting currently because that's what the federal agencies defaulted to. And although organizations, they really have alternatives, the way organizations were doing it before was working, so you may be considering, well, why change? Well, the purpose of the change was really to reduce the administrative burden of time and effort reporting. So as you consider making a change, organizations should really think about whether their internal controls are meeting the spirit of the guidance, and work with your auditor to determine whether your organization is passing the smell test. And I think it's important to be aware that as we're kind of all learning together, auditors and auditees, this is really going to be a joint effort to determine what will satisfy the guidance and what will satisfy the agencies. This is just necessary documentation that you have to include when you're doing your time and effort reporting or your compensation over personnel services. I just want to highlight that none of these are unusual or significantly different in terms of record keeping, so I won't go over each item in this slide, but just know that this is here for you to look back to. So this slide is really highlighting a pilot program that took place about a year ago, sponsored by the Federal Demonstration Partnership, to try out payroll certification as an alternative to traditional effort reporting. Several organizations, UC Irvine, UC Riverside, George Mason, and Michigan Tech took part in this pilot, and actually there was some success when they really looked outside the box. And as of September 2015, the pilot institutions indicated that they had really actually improved principal investigator oversight of direct salary and wage charges to federal awards. really because the review was aligned with the award annual financial reporting and budget cycles. They also had enhanced efficiency by certifying all direct salary and wages charged to an award instead of certifying individual employee charges. So if you're interested in this study, I recommend that you go out and find it and do a little bit more research. But it was interesting, those results. So just to wrap up with some best practices and reminders as it relates to allowable costs. OMB is calling for a mindful shift to a more principles-based approach rather than a rules-based, as noted under the old guidance, but it's important to remember a few key points. Time distribution records must still be maintained for all employees whose salary is paid in whole or in part by federal funds, and the amounts may not be based on budgeted distributions alone. I think it's key to remember that the purpose was really to reduce the administrative burden, and it will allow entities to replace, those detailed time and effort reports with performance-based reporting based on milestones, if your agency approves that. As I mentioned, we'll all be working together to really determine what satisfies the guidance and the awarding agency, so it will be a joint effort as we work through these new requirements. So I think we're going to take a break for just a few questions. Emily, have there been any questions that have come in?
Yeah, we've got a few questions. Let's start with, for our organization, researchers need to acquire items from a particular source for scientific reasons. Would this constitute a valid reason for a sole source proposal?
That's actually a really great question, Emily, and it relates to the Procurement Cloth that we went through. This would be under the sole source procurement method, and yes, this would be a valid reason to acquire items under that sole source method of procurement. The option is available really at all dollar amounts, provided it complies with the procurement standards under uniform guidance.
Great, thanks. Let's go with, when it comes to internal controls, how far does our organization need to go in my documentation of internal controls? What is going to satisfy my auditor and not be burdensome to my organization?
Another great question, Emily. So I think it's really important to remember COSO here. I think while you don't need to go line item by line item in COSO, your organization must have internal controls. And those internal controls really have to be communicated to those within your organization. And how you do that really might vary. We recommend that you have a conversation with the federal awarding agency to really confirm what you have in place is satisfying their requirements. And you should also have a conversation with your auditor to really determine that the internal controls are considered appropriate from their perspective as well. All right, and with that, I think I'm going to hand it back to Erica to talk about the auditor requirement.
Thanks, Ashley. That was quite a sprint through that section there, and there really is so much more to learn. It's hard in an hour-long webcast to even hit just the highlights because there are so many, but we're doing our best. And again, hopefully you will take some takeaways, and this is sort of a reminder of the things that you'll need to dig into a little bit more. So looking at the subpart F, which is called the Audit Requirement, it's labeled Audit Requirements, but as I mentioned, there's some Oddity Responsibilities in here too, particularly around the financial statements and the schedule of expenditures of federal awards. So we do need to make sure that our auditees are paying attention to their responsibilities here. On this slide is sort of a picture of the auditor and auditee responsibilities and the uniform guidance reference where those are spelled out. And if you read through these boxes, there's not a lot that has changed in terms of who's responsible for what. What has changed in some of these areas is how we go about that, or what the particular requirements are. But basically, the auditors are still required to do the audit and report on the financial statements and the FIFA and test compliance, report findings, and then we each have a part on the data collection form to complete and sign that. The auditee is still responsible for the financial statements and the CFA and preparing those themselves. And there are provisions in here for providing the auditor with the access that they need to complete the audit. The auditee also prepares a summary schedule of prior audit findings and follows up on corrective action on the findings. And there's a preparation of a corrective action plan that needs to be done which involved exactly how the auditee is going to solve some of the issues that were raised and any findings that were found. So nothing too surprising there in terms of our split of responsibility. On this next slide, I wanted to just highlight some of the key things that are changing in Subpart F of the audit requirement. Again, many of you have probably become aware of this over time. Some are very easy to implement, others are a little trickier. And I would say each of these probably could deserve an hour or two on its own to get into the nuances of what exactly is required and what the consequences are, which we don't have today. But I wanted you to be aware that these are some elements, and we'll talk through a couple of these things. Before we get into that, too deep into that, though, we wanted to just do a little bit of a knowledge check, see if you're still with us here. Ashley mentioned earlier that the single audit threshold was increasing, so can you recall what it's increasing to? This is a fairly straightforward question, so we will we'll give you just a few seconds here to complete this. One thing I wanted to highlight while we're waiting for you guys to register your votes here is these aftermarket changes. There's a lot of questions that are coming up in terms of the uniform guidance, the little nuances of the rules, and how that works in practice. And I know that I'm involved with the AICPA's Governmental Audit Quality Center, and as a group, we are really working with federal agencies to ask these questions and try to get them to be transparent and provide some answers. And that's where the COFAR's FAQs come out. So you're going to want to be looking at that. I think that also federal agencies might have a tendency to answer questions sort of on a one-off basis. As a recipient and as an auditor, we each have to be aware of how credible that advice is and make sure that we're getting it from the federal agency proper before we make big decisions about what to do or what not to do in a compliance realm. And as these questions come up, because we're now paying attention to those rules, we're pouring through them like we probably did when A133 first came out and the cost principles first came out, just questions are arising. So stay in touch with that, and we'll need to implement as we go. So let's see how our poll turned out. This is excellent. So the vast majority of you are clued into the fact that the single audit threshold under the uniform guidance has increased to $750,000. That's excellent. There was a proposal for it to increase to $1 million, but they backed off of that and decided not to raise it quite that high. So super high level key changes in the audit requirements. We talked about the threshold being raised. The criteria for a low-risk auditee has also been updated. In particular, if the auditor has issued a going concern emphasis of matter paragraph, then that auditee is not considered low risk, could not be considered low risk. So that's a brand new criteria. But it makes sense that the federal agencies would be wanting a little bit better coverage on an auditee that is in danger of not continuing as a going concern. Also, the financial statements have to be prepared in accordance with GAAP in order to qualify as a low-risk auditee, unless you're operating in a state that requires a different basis of accounting. Now, there are some states that allow a different basis of accounting, but that's not the criteria here. A different basis of accounting has to be required by a state in order to possibly be judged to be a low-risk auditee. No waivers anymore. There's absolutely no out for the low-risk auditee criteria. In major program determination, this is a pretty interesting thing that the auditors are going through. The Type A, Type B threshold minimum has been raised to $750,000. It was $300,000. And then the criteria for demonstrating high risk in a Type A program has changed. The key thing here is that the auditor is really no longer able to use their judgment. And sometimes there's inherent risks in a program that are not part of the criteria anymore. So that's really going to change what kinds of programs are high risk or not high risk. Now again, your mileage may vary. Everybody has a different set of awards that they're dealing with. If you've got one program that's over $750,000, you're not going to see any changes at all with respect to major program determination. But that's not the case for most people. Moving on to Type B programs, the auditor is not required to assess risk on small Type B programs, so there's a 25% floor there. It's 25% of the Type A threshold. If you're below that, you don't have to risk assess a Type B program. But and then also the auditor only has to do a risk assessment on 1/4 of the number of low-risk Type A's. Now, in a webcast like this where I'm talking through these requirements really fast, it's hard to get your arms around it. But once you put paper to pencil, you'll be able to follow these rules and see where you shake out. One hint for you, though. If you, the auditor must audit as major programs all Type Bs that they've identified as high risk. So if you have a program of, let's say, 12 Type B programs, but you only need to audit 1/4 of the low-risk Type A programs, and let's say that number is 2. So you only need to audit as major 2 Type B programs, and you have 12 Type Bs subject to risk assessment. If you risk assess all those Type Bs, the guidance as it's written now says you must audit as major, all 12 of those. So auditors out there, a little word of warning that is hitting the streets right now is make sure you're careful about what you risk assess, because once you get a high-risk Type B, you audit that as major, and you may end up having to audit more than you need to, based on the way the guidance is written right now. There's some nuances to that, but I wanted to make sure that warning was out there. The coverage requirements for major programs have also changed depending on whether you're a low-risk auditee or not. And if you want to see how this impacts your federal awards, I think you can easily just run your schedule of expenditures of federal awards through the old major program determination rules and the new ones and see whether you're going to have fewer or more major programs audited under the uniform guidance. In addition to that complicated machinations of the major program determination, the threshold for reporting question costs has increased to $25,000. It used to be $10,000. And the question costs, when they are reported, need to be reported in a way that reflects how they were calculated. So the finding is going to include that detail. The findings also have to include what they call perspective, a little bit more context of where the finding came from, whether it's prevalent throughout the organization or the federal award, and even the type of sampling that was used, whether it was statistically based or not. And also, any findings that are repeated year to year have to be identified now so that the federal awarding agency knows that that might be an area they want to focus on for remediation. On the CIFA, there are some important changes here. The rules are very clear. However, it does take a study of them and kind of putting aside your preconceived notion of what goes on in the CIFA and not. The rules are different, but they're clear. So on the face of the CIFA now, you have to include all federal awards expended, and these include things like non-cash assistance, which sometimes were just put in the notes before. The face of the CIFA also has to include amounts passed through the subrecipients for each federal program. And again, that used to be only required to the extent it was practical. Well, the federal awarding agencies now think you ought to be able to know who you pass money through to and how much. I think that's a reasonable expectation. But you have to put it on the face of the CIFA now, which might require some reformatting of your CIFA. For loans and loan guarantee programs, this can get a little bit tricky too. On the face of the CIFA, you're going to put beginning loan balances plus current period loans disbursed, plus an interest subsidy, cash, or administrative cost allowance. Those are kind of three areas of add-on. So that all goes on the face. Now that is not your outstanding ending balance because it doesn't capture payments made. But that needs to go on the face of the CIFA right now, the beginning balance plus current period loans disbursed. And also, if you have clusters of programs, you need to present the total for that cluster on the face of the CIFA. Believe it or not, that was not previously required. Now let's talk about the notes to the CIFA. Again, when it comes to loan and loan guarantees, your outstanding balance at the end of the year is going to be in the notes to the CIFA. So beginning balance plus current year expenditures goes on the face. Outstanding balance at the end of the year goes in the notes. Also required to be put in the notes to the FIFA is whether or not the federal entity elected to use the 10% de minimis cost rate. And then your significant accounting policies. Those have always been required, but just wanted to make you aware that right now, as you're transitioning from your federal awards being maybe partly subject to the old cost principles and partly subject to the new uniform guidance requirement, you may have to change your significant accounting policy that discloses that. So a few best practices. You can read through these on your own, but just wanted to make sure you were aware of the changes. You do need to plan ahead and be proactive in terms of formatting your FIFA and making sure you've got all the required elements in there. Using a disclosure checklist is a really good idea for this, because if the disclosure checklist is accurate, that's one thing you want to make sure of, you just have to go down there and make sure you've hit all the boxes and they've included everything on the face of the FIFA or the notes appropriately. But this is a great opportunity to kind of refresh your presentation on the FIFA. Some things maybe have gotten a little bit stale, or maybe we let them slide in the past, but now's a good time to get those completely up to speed. So a couple of things we wanted to get through with other areas related to single audits, kind of outside the uniform guidance, but a couple of things to bring to your attention that are in development. The 2016 compliance supplement, when is that going to be out? That's the big question. Well, a couple of weeks ago, I was having a chat with the gentleman who's kind of in charge of putting that out, and he said it'll be out in a couple of weeks. So that tells me any day now, but I haven't heard boo yet in terms of it hitting the streets. So I do know that they're working on Part 6 on internal control. They're going to include something more than was in there in the past. Not a whole lot of guidance. I think they're going to continue to develop some guidance that's actually helpful, but they are building out Part 6 a little bit more than they had in the past. You will see some changes in here. There's a little more tightening of the words should and must in the compliance supplement to match what they do in the uniform guidance. You're still going to have 2 Part 3s. One applies to the old OMB cost circulars, and the other applies to awards that are subject to the new Uniform Administrative and Cost Principle regulations. Part 4 and Part 5 are actually also going to be updated. They're going to include a snippet from the Part 2 matrix of compliance requirements within each program's profile, I'll say, in Part 4. So that should be interesting, and hopefully that will match a little bit better with the Part 2 matrix. The data collection form then, again, is changing. We know we haven't been able to make submissions yet for audits performed under the uniform guidance because the form has not been developed yet. It's in its final comment period. The comment period ends May 23rd, so if you want to take a look at it, it's on the Federal Audit Clearinghouse and OMB websites. You can take a look at what it looks like. There are some changes that are listed here on the slide, so you can read through those. But I guess the takeaway here is beware that there are changes and differences in like the certification statement that the auditor and the auditee make. And there's also just enough little changes that you might want to make sure you spend enough time and have a good review of the data collection form before you submit it. The Federal Audit Clearinghouse did give an extension because of the delay in getting the form out. So right now, any audits that were due prior to July 31st, 2016 don't have to be submitted until that date. So there are some period ends that would fall under the uniform guidance, would need to use the new data collection form, and you've got a bit of an extension there. This is the wording directly from the Federal Audit Clearinghouse website. Just a couple of final thoughts then too. Your engagement or your single audit might be more complex than it has been in the past. We're in transition. There are new requirements. People are interpreting the rules a little bit. Policies and procedures are changing. I would say this is likely to increase the time that is being spent on a single audit, and the more that the auditee and the auditor can work together, the better off we'll all be. So a little proactivity and planning up front is going to be very helpful. You may find an increase in findings as new procedures are put in place. They may not have been as effective as planned. or the compliance requirements might be misinterpreted. In terms of implementation, I've kind of said a lot of these things: collaborate, communicate, don't procrastinate. The time is now to get on this. It sounds like a lot of you are, though, in a pretty good position. So with that, we are nearing our time. I think that we'll hold off on answering the questions. A couple of questions have come in specific to the part that I just went over. But I think in the interest of time, I'll just wrap up with resources here. There's a few listed on your slides with links to where you can find the information. I encourage you to, especially for the auditors in the audience, look at the Government Audit Quality Center website. There are also some webcasts available to auditees in terms of preparing for the uniform guidance that are quite informative. With that, Emily, I'll hand it back to you to do some final wrap-up.
Great. Thank you, Erica and Ashley, for a great and very informative presentation today. As a reminder, if you attended today's presentation in a group and would like to receive CPE credit, you must complete the group attendance sheet in order to receive credit. If you participated as an individual and met all certification requirements, your certificate is available to download now in the CPE icon at the bottom of your screen. You can open the icon and click the printer in the lower right corner to download a PDF. I'll keep the webcast console open for a few more moments to give you time to download your certificate now, and a copy will be emailed within 2 weeks. Here's a link to an online survey where you can provide feedback for today's presentation. Please take a moment to complete this survey, as your feedback is very important to us. Thank you again for joining us, and we hope you'll join us next time.